Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's program, I'm going to be asking the actual question which is on every investor's mind. Are we still in a bull market or are we at the start of a bear market? We'll have a look at a few critical charts which are giving some sort of a clue, and then everybody can make up their own mind. We're certainly at a very critical juncture to find out what's really happening with Bitcoin. We'll have a rundown on the various time frames for Bitcoin and make head or tails of what's happening in the short term, the medium term, and the longer term. So if that sounds interesting, you know what to do. Get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes, so please always do your wider research before you make any investment decisions or any swing trade decisions. Okay, we're going to start off by looking at exactly what's happened in the last week or so, which is raising the question of whether we're still in a bull market or have we started the bear market. And I'm going to look at this daily chart because what's happened here, the question is that was this the final scare? This was a candle on the 10th of October where we had the Trump tariff tweet, which brought Bitcoin down from a high here of around 122 all the way down to 103,000, which was a 15% move to the downside. And the question really is, was this the final scare before we eventually continue the bull market for a blow off top in the next month or two? And there is a reason why you see these levels marked up. These are the targets I gave to the members here at Wisdom Bites just yesterday. And the first target, as you can see from yesterday, so the first target has actually been met today, and this was the 38.2 Fibonacci level. The next target that we've got is 114,000, and this is the big one here. This is the critical level which everybody should be watching. That's 117,000, because just like the price came back down and we had a counter trend rally, the big question is this going to be another counter trend rally before we actually roll over for a bear market, or is this particular pattern down here going to be a catalyst for a big move above the previous all-time high? So we're going to have a look at a few critical charts to make head or tail of exactly what's going on and what is the most likely outcome in the next few weeks. Instead, what I'm focusing on at the moment is that the final straw for this particular bull market will be a break below the 8 EMA on the monthly time frame. And as you can see quite clearly, the blue line, which is the 8 EMA, which has been finding support ever since we broke up above here, even though we lost support at this point but recovered it very quickly, but it has found incredible support as you would expect, and this is exactly how it's played out from the previous cycle. So there are certain characteristics which have played out according to the previous cycle, and the 8 EMA is still intact from that point of view. And currently, as you saw quite clearly here, it came down to the blue line, 103,000, and then we bounced off there. But what's interesting here is how this particular monthly candle is going to close. And I'm going to have a close look at this now to give you some sort of a clue. And we have to just bear in mind that we've still got 10 days to go to the end of this candle close. But many people looking at this, not knowing what this really represents. So I'm going to give you some insight here today. So this candle here is what you call a high wave spinning top. Because there's so much indecision in the market, it may well be that we end up with this particular candle, and this would not be a good candle to end at the top of a very strong trend in the time band of being in the middle of what you would normally expect the end of a 4-year bull market, because that would be the first sign that we're highly likely going to close below the 8 EMA in the following month. This will have the power to bring the price down. The question is, what does this candle represent should we close here? So this is the candle here, a high wave spinning top, and for those who want to learn candlestick patterns, it's called Takane no Chiai. And what it's really forecasting, as you can see quite clearly here, is a lack of determination. There's indecision here, and that's pretty obvious because we've got a long wick at the top, a long wick at the bottom, although the wicks are slightly different in size, but we have real indecision in the market. And it's actually very similar to the long-legged doji candle, and what they're really indicating is a market fluctuations which are going to be very rapid, and we saw that with the Trump tweets on the 10th of October. But this is the critical one here. It may represent a threat to the current trend, so we've got to be really careful here not to get sucked in by the market and the counter trend rallies and think that we're really on our way. We may well be, there's no doubt about that, but we need to heed to some of these candlestick patterns. But as we know, we should always put the candlestick patterns in the market's context. As it says here, the importance of the candles in many cases relies very much on the market context, is that we are at the end of a 4-year bull market run, and one thing to watch out for is that it should be accompanied by an increased volume. So obviously it's not just looking at a candlestick but also looking at various other factors, the context and the increased volume, that gives it a little bit more weight. And if we put the volume on, we've actually been rising in a falling volume. So that's the context at the moment. So while the candle is actually showing an indecision candle, we do need to keep monitoring the volume. It's not come at a great volume at the moment, which reduces the weight of this candle. But always remember, with volume, it can always come very, very quickly. If people think that the market's going to go down, the volume will come in. Moving on to the weekly time frame, quite a few interesting developments here. We do have a bearish divergence on the RSI making a lower high, while the price has actually made with the 126,000 a higher high. There's also a cross between the 8 EMA, the blue line, and the 21 simple moving average, which is the yellow line here. And so far, we have found strong support on the white line, the 50 simple moving average. And this is what we've got to hang our bullish hat, that in the past we have bounced off this white line on numerous occasions. And we'll all be hoping that this is another time where it makes new highs after bouncing off from here. So it makes new highs from previous big moves down to the 50 simple moving average. But context is key. We're now in the middle of October, and our timeline for the end of the 4-year cycle is either October, November or December. So we're right in the thick of those 3 months. So this takes a more important role in what's going to happen with Bitcoin. The issue that I've got with this is that you can see that the immediate trend here with the 8 EMA coming down, just about to cross with the 21 simple moving average, is that quite obviously the trend has actually slowed down, which has made the 8 EMA, the exponential moving average, which is a dynamic shorter term time frame, and because the candle is now below the 21 simple moving average as well as the 8 exponential moving average, they're now going to form a resistance for the price to get above. And that resistance is around about 113, 114, call it. So when we get to the 114, expect some resistance here. Moving on to the daily time frame and looking at it through the eyes of the 60-day cycle, very important what's happening here. Firstly, the purple line is the 200 simple moving average. So we actually came back down and we bounced very strongly off that line here. And at the moment, the 8 EMA, where the price has now come to about 111,000, I would expect some sort of a consolidation here before we move on, if indeed we are going to move on to the 114,000. And you can see quite clearly the white line, the 50 simple moving average on the daily is right on the 114,000. And then we have the big one here. It's this box at 117. If you're wondering how I got these targets, it's exactly the targets I gave you when we had this particular failed cycle here. So the high of that was at that point and the low, and you can see quite clearly where the price came up and got rejected. These were the targets I'd given you in the last cycle where we had this failed cycle, where I gave you the higher probability that we're not going to go and retest that level, because the failed cycle gives you a certain characteristics and an insight into more than likely what is likely to happen on this counter trend rally. And the targets I gave you were these here at 114, 116 and 118, and it came all the way up to 118. Similarly, because this cycle is playing out very similar to the previous cycle, and if you do the Fibonacci level from the previous at the all-time high of 126 and the low that we got at 103,000 recently, and if we move this to the left here, so we've come to the first target right on the 111 on the 38.2. Then the 50% Fibonacci level now is the next target, 114. And this is where the 50 simple moving average is here. So this looks like a very strong point where it's going to find some strong resistance. But as people who want to continue with this bull market here, we will be hoping to get at least to the 117. And this is the critical juncture where Bitcoin has to decide whether it wants to continue in the bull market, or this is where it wants to start the bear market. Very, very important point here at the 117. So keep a lookout for that. And if you're going to read the cycles, this is very important now. So to find out what is most likely to happen in the next few weeks, if you go back to its previous cycle, this is giving you a very strong clue. And that is that at this point where the previous cycle started, that was on the 3rd of August, what we got quite clearly when we broke below the start of the cycle, what we got here was a failed cycle. And what that failed cycle told us, as I mentioned at the time, many times, that we'll probably get a counter trend rally, but it's going to roll over for the decline into the end of that cycle. So this is exactly what we've got here. This target was highly probably not going to be met. And similarly, the 126 is not what I would be expecting any time between where we are to the end of this cycle here. The high probability plays, and of course nobody has a crystal ball, nobody can tell you with definitive answers that this is going to do exactly A, B, C, and I'm certainly not going to pretend to do that. All I can do is read the market, look at the patterns and the fractals, and make a high probability judgment as to where the market is most likely to go. The higher probability play is very similar to what happened here, and that is that I'm expecting some sort of a move either to the 50% Fibonacci level at 114 or the 117 at the 61.8 before we roll over, and we have to then monitor what's going to happen here. But the higher probability play is that we should get to at least the 114 if not the 118, and then expect a 61.8 fall into making this as a double bottom. The end of the 60-day cycle is at this point here, around about the last week of November. And we know that 2 of the previous 3 cycles have ended in November. So from a traditional 4-year cycle point of view, we really need to make a new high. But the failed cycle is telling you otherwise, that this is unlikely to happen in this cycle. And many people are very bullish at this moment, and they may well be right. I'm always open, fluid and flexible that if we get above this, this would be an unprecedented move and be the lower probability move. But if we do break above this, that would actually be a very strong clue that we're going to have a very strong blow off top in November, possibly December. So again, this point will become a very critical level should we get to that. But the higher probability play is that we're not going to reach that level. So what I'm going to do is I'm going to have a look at a few factors to give us some sort of a direction of the trajectory of Bitcoin. And unfortunately, the catalyst was really this thing here. What we had was the dramatic crash with the Trump tweets on the 10th of October. That led to the cryptocurrencies sinking investors because they had to get out of their high leveraged positions. And we got a record 19 billion in liquidations, which was a record for this market. So this is what was, so really this was the catalyst. It could have been something else, but this is how things work out. There has to be some catalyst to bring the market down. If I have a look at the liquidation heat map, what we do see is that there is a possibility for the market to come all the way back down to this prominent zone here at around about 106,700. So there is that possibility, and we do have a higher zone at 112. And in the news, according to many analysts here, the key level was 108,000 close on the weekly time frame. And according to them, the market can carry on going up if it can reclaim that 108. So that closed yesterday. And if we have a look at the weekly candle, so when I place the cursor here, have a look at where it says the C, which is for the close. And we can see the close was at 108,600. So we did meet that condition there. And this is why we're going to have, with a high degree of probability, counter trend rally. How far that goes, we really don't know, but we've got those targets. We've met the 111, we've got 114, and then the 117. Now, one of the bullish signs that we've got is that we are expecting 2, possibly 3 rate cuts between now and January 2026. The next Fed meeting is to decide the interest rates. We're expecting a 25 basis points cut from 4.0 to 4.25 down to 3.75 to 4.0. And if you look at the December figures, it's now 96% to go down from 3.75 to 3.5. And if you look at the January meeting, there's a 52% chance that we could go down to 3.25. And what this is doing is providing quite a lot of hope for the end of the bull market and that we're going to have a blow off top. So as you can see quite clearly, there are a lot of bearish signals and there's also some bullish signals. And this is why we're at a critical time and everybody can make up their own mind which way the market is going. And for those of you who are interested in our portfolio in the private member section, at the close of play on Friday, on the 17th of October, our passive portfolio, where we just left all of these investments for the Bitcoin miners from the starting level of $100,000. This actually went up at the beginning of last week to 1.2 million. So that was the highest we'd ever had. So it's now down to just about 1.1 million. And with our trading portfolio, where we do a lot of ratio trades, that portfolio is now lagging a little bit behind because we were doing the ratio trades with some of the miners which haven't got going yet, the traditional pure play miners, which was Marathon and CleanSpark. So this is where we're at, from 100,000 start to around 1.1 million and just under 800,000. And if you want to compare that performance with Bitcoin since the beginning of the bull market here at 15,400 to its high of 126,000, we can see Bitcoin's gone up by 715%, so a 7x, which is very similar to the average performance of the Bitcoin miners in that period of time. And at current levels, where we are at 110,800 as I'm doing this video, it's up at 615%. And before we finish, I just want to give you one more signal, which is very critical, because sometimes the Bitcoin miners do front run the Bitcoin price. But as we know, it also happens vice versa. So it's just something that we need to just keep an eye on. And that is that last week, on the Friday's weekly closes, we did get some bearish looking weekly closes with the Bitcoin miners. And as we know, they've had a very strong run while Bitcoin's been going sideways mostly and left this bearish looking candle. And the question is this giving us a strong clue whether Bitcoin is not going to be making new all-time highs anytime soon? So this has a power to bring the weekly candles down between 1 and 3 candles. So it could well be in the next 1 to 3 weeks, some of these miners start to retreat to the downside. So this could quite easily be giving us a strong signal of what Bitcoin is going to do in the next few weeks. And if you have a look at the last cycle, at the end of 2021, it was this same candle that actually was the start of the big bear market, which brought Marathon down from $83 all the way down to $3.11. Of course, I'm not saying this is what's going to happen, but the signs and signals are there for us to weigh up and then come to our own decisions of where the market may well be going. And we cover all of these types of things with the Bitcoin miners as well as Bitcoin with 2 specific videos on a Wednesday and a Saturday. And the last 2 videos we did was to look at the possible tops for the Bitcoin miners. These are the reference points that should we break below those levels, then that would be the time to take a defensive posture for the Bitcoin miners. Very important levels, and those are the types of things that we discuss on a daily basis with a market update at the end of the closing session, Monday to Friday, where we post these updates to give us some sort of a clue, some sort of idea of exactly what's happening in the day and where the market is going. And this is the critical juncture that we're at the moment. And this is where we really need to have as much information as possible to make the best informed decisions. And if this is the kind of thing you're interested in, then if you go below any of my videos, you'll find there's a join button here. But also, if you're on a handheld device, you may not see this join button. But if you go into the description box, you'll see this Bitcoin miners membership join link. If you click on that, and for the price of 1 coffee per week, you can get 2 specific videos on Bitcoin and the Bitcoin miners, as well as a daily update Monday to Friday, especially during a critical period that we're in. And always remember, you can cancel at any time. There's no obligation or any contracts, so you can try it out for a month if you want to. At the moment, the membership is virtually full, and we're operating a 1 out, 1 in system. And as soon as somebody leaves, there's a place for a new person to move in. So please do keep trying, and we'll see you there in the private membership. Okay, so I'm going to leave it there. I hope you found value in the video. If you did, then please do remember to like and to subscribe if you haven't already done so. And if you've got any comments, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.